Good afternoon. Say good evening. Uh, Today I'm going to show you what exactly it takes for a people to make the decision and how the professionals actually look into it. Okay. So what I have is a monthly Nifty. So this is monthly Nifty, the peak, and this is the lowest candle wick that has been seen, that is 21,281.45. Now let me pick the tool. Whenever such peaks are made from this is a one peak, then this is a correction, then it made a impulse, correction again, then correction again, then it's the channeling. Actually this is called a channeling. Then they peaked. Okay. Then usually what we call this is this is a steep run. So this has to enter in a sideways. That is based on the wave theory. That means if a one is run the steep way, it's a very complex 535. Okay, it's called complex 535. That means it is having a 5 wave here, 3 wave here, and then 5 wave down. Okay, it's called complex 535. If there is a complex pattern here, it has to be a simple pattern over here. It's always works inversely. If this is steep, this is very steep, right? Then it has to be simple sideways. Then this channeling. What are you witnessing is that you are witnessing in a professional outlook with simple methods. No rush for bigger methods. No rush for any bigger conclusions. So let's see what happened here. Here the price broke the trend line. So we usually come and stop it at the price levels. So we put up the last leg. This is the last leg. From there the market has entered into sideways. What we notice is that if the price has to make a continuation, it has to close above 26,277.35. Price have penetrated it but never closed, not even on daily. So indicating that the price has made an impulse correction, impulse A B C correction, then it is making a last its drop to 21,281. Once when this is completed, we are looking for an upside move. Now ideally this upside move will be, excuse me one second, this upside move will lead, it should go 0.618 the length of the entire move. So somewhere we are looking for 32,879 or somewhere near 33,000. Okay, so this is what we are looking right now in the market. So the many people are being panicked because what will happen, nothing will happen. You need to understand this. Okay, now whenever you see a trend that has uh, been making, you can see this is simple, it came very simple, and this is complex, it started gapping here. So when somebody come and tell you, boss, I know the things, I can do the things, I have done the things, run away from them. Just run away. Because I am showing you a very easy methods. This is simple move down. This is a complex move down. This is a simple move up, and here all the drama started going narrow and narrow, narrow, and it's a complex. This is simple A, B, then this everything is gap. Then it will stay here for another 2-3 weeks before it makes a final drops. Okay, because this was a very sharp move up, so we are getting in a, a sideways pattern. Probably it will remain there for another 2 months before it comes down to this pattern. Okay, so this is the way we justify the system. Now let's come to the daily. And when you see there are a lot of gaps in this, in order to avoid gaps, you can go for HLC, high-low close. One second, let me HLC high-low. No, it's a high-low. You don't have HLC bars. You have bars. Okay, the gap is not being filled. Then you can go for step line. The step line is basically it's a price where the closing only is accounted here. The only closing is accounted here. Okay. So you can clearly now see. See, as a wave theory, many people knows it. It's a wave one. It's a first drop. The second one is steep pullback. And we are looking for a third one, and a fourth one will be sideways before it's go down. Is that so easy? No, it's not that easy. But yes, for professionals who look into the pattern every single day, it makes them easy. It looks easy. So ideal understanding has to come in the trader's mind. How do I trade this? And how do I catch this much big move? See, this move from this low to this is 3,144 points, and it's the biggest move. It's a 3,000 points is a big move, and when you consider the date, it's the fastest move. Within 29-30 days, within 47 days it has completed. Okay, that means within 2 months contract you have 3,200 points. So how you can catch this kind of trends? The question comes, Krishna ji, I have done everything. I know RSI, I know MACD. I am unable to take the entries. The biggest problem is with the trader is not identifying the trend. The problem is they cannot enter the trade and they don't know what is their stop. They fear always because their stop will be hit. In that fear, they book early profits. So is there anything that you can follow and you can continue to keep trailing the stop? The answer is education and rightly following the rules. You may get hit by stop. Yes, occasionally, yes, you will get hit by stop because pattern changes. But those stops, 1 or 2, will never make you poor. But the rest 8 trades, out of every 10 trade, if you get hit with the 2 stops, that's okay. But rest 8 trades, that will give you the largest money you can ever make in the stock market. And it is beautiful. People don't understand it. It is so beautiful. You can make money. Yes. Need small detailing understanding. Small understanding you need to have. Detailings you need to have. So what to do? So I will come down to the 1 hour, preferably 75 minutes. And I will use a candlestick as a charting system. And because I'm coming down to the 75 minutes, that means we are still going to maintain the stop based on based on daily stop levels. Okay? So that's very important. Make sure you don't lose the money. Don't lose the money. Let's see. So I'm going to I'm going to remove this. You all know now. I'm going to use pre-prepared some of the indicator setups. Now, why we are going to use the indicator setup is because to understand our limitations. What are our limitations in the form of stop? What are our take profit in the form of when indicator goes very slow or indicator indicates that the momentum has lost. So that are our limitations, either to book the profit, trial the stop, book the profit, then take the re-entry. That must be your uninterrupted trading method. Okay. So first let me go through the option buying. So this is an option buying which I kept it for 2 minutes. Can we look into this on the daily? The answer is yes, my friends. Answer is yes. Look at here. I'm not joking. This gave you the sell below 20 period, below 200. What is stopping you? And your stop is here. And your first target is this. This is your first target. And you exceeded the first target, basically. You exceeded the first target. Then this continued to flow along with this. So there is nothing you need to see in it if you are a trader on a daily, unless you have two bar ignored. If the two previous bar is ignored, then you can see this is a this is an indication of buy setup, but it is not actually in a buy setup. It is below 20, below 200. All you can do is you can make a trailing exit over here. Then you can take again one more shot over here or somewhere over here. So that is based on the smaller time frame. You can go for 30 minutes in case I want to go little 70 below, not 75 is an expensive one. So I would like to go for the 30. You can go for 30, you can go for 15. Now I'll tell you one thing. These moving averages act like a rubber band, right? So when you sell short over here, when this breaks and your stop is here, the first target is already booked. Agree? So this you made around about 200 or 300 points. Agree? You might not have booked the profit. You might have booked the profit over here. That's a flag, right? Look at here. This is the flag. You might have booked when previous red is triggered, previous sell is triggered, you might have booked on that. Okay? So these are the parameters you need to understand. So I have shown you this option buying. Just a second. Okay, I have shown you always this option buying, and I have shown you the other day price action also. This is a price action. If you are interested only in price action, yes, you need to have this fractals, and based on the fractals you can trade. Okay. Then you have chaos trading. Chaos trading is again Bill Williams chaos trading, where you basically get to know that when the market is trending or when the market is entering into consolidation phase. Okay. In chaos trading also it's very simple. Where the first break of the fractal, and this is your stop. When this first is broken, this is your entry and 200 is your stop. Once 200 crossed, one RBI, red bar ignored, you put the stop over there. Then the second red bar ignored, and you found a fractal, you made an exit here. Then again when it breaks, enter it. Then again one RBI ignored, two RBI ignored. It is a peak. Once two RBI is ignored, you have to book the profit. Understand? So this is in 2 minutes. The another one is FNO trading. This is an FNO trading for 15 minutes. Whenever you find above this shaded area, the shaded area is basically 9 period downtrend channel. When the price close or breaks above the 9 period, it is an indication that the price is going for next fractal. It is going for the next fractal. So in order to trade the price action also, you must have the stop is, I'll tell you the stop. The stop is 130 points and the take profit is, my friend, next fractal is 402 points. Exactly, you would have made 26,000 rupees in trading in a single contract. 26,000 rupees. Nobody is going to stop you. But you must know what exactly you are dealing with. And if you don't know, then my friends, it's a difficult task for you to trade with. Then I have super trend and moving average. Again, it is on 2 minutes. 1 second, please. Okay. So again on the super trend and moving average. Again, if you see carefully, this is the first fractal upside the super trend, and you are buying the higher this thing, the close above this. This is the same thing, and the super trend would have become your super trend, and 20 period moving average both would have become your partner for the trailing stop. Once the price breaks below this fractal and makes a super trend low here, that would have been the exit. And let me calculate what would have been you would have been made on that particular trading. 339 points. No more doubts. Education is very, very important. If you know how to trade, you can trade. If you don't know how to trade, then it will be very difficult for you, because you cannot make money without having a proper knowledge, because this is expensive. If you trade one future contract, you have to pay 14 points as a brokerage. That is somewhere around about 975 rupees you have to pay as a brokerage. For weekly and daily, people can wait for this price to see. I'm on 75 minutes, right? People have to wait for the price to close above super trend, then break of that particular fractal like this kind of carrot. Then you can look for a buyback on the 20 period moving average. This is 20 period moving average. You can buy back, you can have some little momentum here, then you can look for the downward end in case you want to trade on the daily and other things. So the goal remain very clear. If you don't know how to trade, it will be very, very difficult for you to push the things. You can look for this up to 23,900. Price usually they go and tag super trend before coming down, or sometimes they can tag 20, this also 23,500 also. let's see. This is what is my view on Nifty, and this is what we are looking. If you go for the weekly also, you can see there is a clear sign sell setup over in the weekly. This is a weekly closing, right? It has broken the fractal. It has given the sign here. You would have sold here 24,500 somewhere, and you would have made around 2,000 points, and it will likely to come 21,700 or something like that, 21,300 something. Okay. So this is how it is, very very simple. You need to understand that. That's all. Okay. Thank you very much.